Hey guys, this is Alex Owari from ONG Tax and Accounting Services. I'm sure some of you have had the opportunity to actually read on Google some of my articles on foreign-owned single-member LLCs, and most of the time it's foreign-owned U.S. LLCs and all of that. Now, this video is going to be a very simple one. It's going to be very short in the fact that I know there's a whole bunch of information out there for foreign persons who have U.S. LLCs and foreign persons who are engaged in U.S. trade or business. So in this case, or in this video, I'm gonna be very concise and very clear on certain things that foreign owners of U.S. LLCs needs to be aware of, right? So we're going to be talking about the tax implications when you're considered to be doing business in the U.S. and how you could avoid those kind of factors that could consider you to be engaged in U.S. trade or business, okay? And it's the distinction of being engaged in U.S. trade or business is very important. So it's important that we are able to discuss it and kind of get a little bit of clear information out there. So I'll move on and introduce myself to you. So once again, my name is Alex Owari. I'm a CPA licensed in Massachusetts. I'm also licensed in Colorado, and then I'm also a full member of the National Society of Black Certified Public Accountants. So if you haven't talked to me before, or this is the first time you're hearing my voice, this is me. All right, so let's dive straight into why it matters if a foreign person is engaged in U.S. trade or business. The distinction matters very much because when a foreign person is engaged in U.S. trade or business, it basically subjects all of the income they make within the U.S. effectively, all of the income they make in the U.S. taxable. And it is taxable unless there's a treaty that can override or reduce the amount of taxes that you're going to be paying. When we discuss a foreign person means that anyone that's not a U.S. person or anyone that's not a resident alien, does not have a green card, or has not stayed longer in the U.S. to the extent that they have to be considered as a resident, or anyone that is not a U.S. citizen. So if you don't fall into any category, you would be a foreign person. And foreign persons defined broadly, it includes a foreign corporation, a foreign trust, any type of foreign entity, and it also includes non-resident aliens. Okay, so if you're an individual, you're also a foreign person, and you don't have any connection in the U.S., you don't have a green card, and all of that I've mentioned already, and you're considered as a foreign person. Now, why does it matter to discuss about this? It matters because when it comes to foreign persons, the U.S. taxes them on two types of income. It is income that is effectively connected to the U.S. trade or business, or passive U.S. source income. So we'll talk more about what are passive U.S. source income, or FDAP. But the main thing you have to know is that non-residents are taxed on U.S. source income that's effectively connected, and those that are not effectively connected, but they are passive income. Okay. The determination is important because if you have a U.S. trade or business, you're subject to taxes unless a treaty comes into play. And then also if you have an FDAP income, the code generally requires that you're taxed at 30% unless a treaty applies. Okay, so those are the two types of income that you could end up paying taxes on as a foreign person. So we move on to why FDAP is taxed as gross. FDAP is taxed at gross because, and when we say gross income, it means all the income you're receiving without the benefit of taking any deductions or credit. And so, assuming you come from a country that does not have a tax treaty and you're getting things like royalties or dividends, then you get taxed at 30% flat rate. But if you come from other European countries or other countries that have tax treaty, you could end up having a reduction of these tax rates, or even end up paying zero taxes, depending on the tax treaty between your country and the U.S. So FDAP is taxed as gross because investment income or certain passive income or passive income in general is not considered to be income that's generated out of a trade or business, right? If you're investing in your own account, such as, putting your money in a brokerage account and buying stocks, those things are not considered to be a trade or business. And therefore, the U.S. does not allow you to take any deduction. Plus, before we even consider you to be engaged in U.S. trade or business, you must have some kind of physical presence, and the activity must be very continuous, regular, and substantial in the U.S., not just collecting dividends or selling stocks. Those are not considered, usually not considered as active trade or business, unless you're involved in banking or something like that. But yeah, so this became important because back in the 1930s, people that invest in their own account decided that being in a U.S. trade or business gives them more advantage, trying to put themselves in a status of being in U.S. trade or business to get the advantage of taking deductions, right? And the IRS has ruled time and time again, and even the court has ruled time and time again that investing in your own account or being an investor is not considered as a trade or business. And therefore, certain expenses like management fees and other fund expenses are not deductible. And so that's why most foreign persons are taxed at 30% gross unless there's a treaty. And those taxes are withheld at source. So when we say withhold at source, whoever pays you that income takes out the taxes, remit it to the IRS, and then you get the rest of it. All right. So we'll talk more about FDAP in our next series of videos that I'll be doing. But I just wanted to touch base with you guys on what FDAP is and why it's taxed at gross. So I'll move on to the next one. And as you can see, there's so many types of FDAP income, right? And I think the most popular one is interest, dividends, capital gains, and rent and salaries. There's also some nuances when it comes to interest. For example, interest earned in savings account, checking account, or brokerage account for non-resident aliens are usually not taxable, so there's no withholding. And then we could also talk about things like capital gains. Capital gains are usually not taxable to a non-resident alien. So if you are a non-resident alien, and then you have stocks within TradeStation, Fidelity, or any brokerage account, if you sell any of those stocks, those capital gains are not taxable in the U.S. Okay. Now, there's an exception with every law, most U.S. tax code. The exception is that if you are a non-resident alien and you stayed in the U.S. for 183 days or more within that specific year in which you sold the stock, then yes, you could end up paying taxes on those capital gains unless there's a treaty that kind of comes in to negate those taxes. So it's just one thing that you need to be aware. But generally, non-residents who do not stay in the U.S. or do not have any connections in the U.S. do not pay taxes on their capital gains. So that's just by the way, and I'll move on to the other slide. All right. So effectively connected income. Now, effectively connected income is income that's connected with the U.S. trade or business. Now, U.S. trade or business, as you can see from the picture, most of the time, to have a U.S. trade or business, it's all about physical presence, right? And physical presence could actually come about when you have your own offices or warehouses or physical locations where continuous and regular business is being done, right? Or you could also have a case where you don't have any of these circumstances. You don't have a warehouse, you don't have any offices, but then you have an agent. Now, if the agent is independent, you're good. If the agent is not independent and it turns out the agent is basically like an employee or a dependent agent, then that agent could cause you to have a physical presence here in the U.S. So, for example, if you have an agent that you control and that agent makes all of his income from your business and doesn't have any other business with the exception of your business and helping you in all of your business, then it's assumed that you're furthering your business or transacting your business through that agent. That agent in the U.S. is doing what you would not have been able to do in the US because you were not here, right? So the agent is representing you and doing all of that stuff. When I talk about independent agents are, and a bunch of people I see in my tax business are foreign corporations or foreign persons that are dealing on Amazon, eBay, Shopify. Most of these people send their products directly to Amazon, and Amazon has its own workers, and they package and they do all of that stuff. Now, this is the business Amazon is in, okay? Amazon is an independent agent. Amazon does not work uniquely for you. They are not exclusive independent agent. They have millions of other sellers they work with. So if you're doing Amazon FBA, or you're just doing Amazon fulfilled by seller, where you just ship directly into the US, you don't have any offices, no employees, then the income that you're making on Amazon is really not taxable in the US, okay? It could be taxable in your country, but it's not taxable in the US. Now, there's one caveat that I need to give you. On the federal level, there's all these exemptions where if you don't have trade or business, you don't get taxed, right, in the US. But on the state level, that's not the same, okay? So whenever we say, whenever we're talking to you and we say your income is not taxable, we're only talking in the terms of federal, but not the state, okay? Some states, if you have an inventory stored in that state, you probably will be liable for sales tax. You will be also liable for maybe franchise taxes. So we have 50 states in the union. You always have to review all of those states to see if you have any income tax exposure. But on the federal level, as long as you don't have employees in the US, you don't have an office or warehouse, you're good. Or as long as you don't actually travel into the US to do any kind of business, you're fine, okay? Because the concept of U.S. trade or business was developed way back long time ago in the 1930s or maybe way back. And the context was deal with traditional types of commerce, which generally are conducted through identifiable physical locations and not just e-commerce. So for those of you doing e-commerce, it's just what it is. If none of these factors comes to play, then you don't have a trade or business in the U.S. and federal taxes. You're not required to pay federal taxes on your income if you don't have any of that. But on the state level, you need to review each state one after the other to see if you have an exposure, okay? All right. So, and then also, I have to talk about services income. A lot of the time, I see foreign persons providing services to U.S. clients. The same thing, the same rule applies. For services income, the income is taxed at where the work is performed, okay? Most of you guys who are doing internet marketing and all of that consulting, and you sit in your home country to perform those services, those income is not taxable in the US, okay? It's only taxable, maybe it might be taxable in your country, which I don't know much about your country, but income is sourced at where the work is performed, especially when you're in the services business or consulting. And then for sales income like Amazon, eBay, Shopify, as long as you don't have a physical establishment, you're fine. You don't have an employee, you're fine. As long as you don't travel into the United States to showcase your product, to advertise your product, to sign contracts and stuff like that, you're fine. But if you find yourself doing any of the stuff that I've mentioned that create physical presence, you need a real tax attorney or a CPA to help you untangle it, okay? So yes, let's see. So I'll move on to the next slide. So a trade or business can be found, as I've told you, you could be found to have a trade or business if you have a fixed place of business where day-to-day management of U.S. operation by maybe a U.S. employees takes place, right? You could also have a trade or business through a dependent agent where there's an employee or there's an agent who is exclusively working for you to make the kind of income you're making. And you control their decisions. You also control the decisions on the day-to-day operations. So that could also cause you to have a U.S. trade or business. The next one is where the foreign person himself or the corporation directly perform the services physically in the United States. So that could also cause you to be engaged in U.S. trade or business, and your income will be taxable unless a treaty comes in to override it. So we will talk about treaty stuff for those who have ECI or effectively connected income. We'll talk about treaty stuff when we get to it. But for now, let's just deal with the U.S. trade or business concept, because it is the first step that you need to cross through before you even think about effectively connected income. Okay. All right. So we'll move on to, even when an office or a dependent agent is found to exist, there's a due regard clause in the code that says that the purpose, the character, and the purpose of the office also have to be considered. So, for example, if you're a foreign person and you have an office or you have an employee who is here, but all that the employee is doing is maybe doing bookkeeping or keeping records, or we call this kind of functions helpful, ministerial, adjunct, preparatory, auxiliary, or planning functions, then that would necessarily not be regarded as a U.S. trade or business. So the determination of a U.S. trade or business is a very complicated one. Like, it's not something that someone has the magic ball to tell you that, look, this is it. I've been able to figure it out. It's not something that could be done easily. So it's all based on fact and circumstances. Each foreign person who's had something to do, has some connection in the U.S., needs to talk to a tax attorney or a tax accountant to review your fact and circumstances. Not all of your cases are the same. There might be one simple issue with your fact or circumstances that could cause you to pay taxes in the U.S. So, listening to some of us is good, but sometimes, most of the time, you need to talk to someone personally. Talk to a tax person personally, and then tell them all that you're doing in the U.S., and then they will analyze it and see if you really have an office or place of business in the U.S. Okay, but there's so many things that needs to be taken into consideration. And then we move on to the code definition of what the code says about U.S. trade or business. Now, the issue is the code itself does not define U.S. trade or business. The Treasury regulations from 864-2 to 864-8T has kind of provided some meaningful guidance, but it's still not clear. So what happens is the court, these issues are usually resolved by the court, because it's for a foreign person to be engaged in U.S. trade or business, there has to be so many factors that needs to be considered, right? And it's not an easy one. And so the court comes in, analyze all the issues, and basically sets out the parameters on when a person is engaged in U.S. trade or business. And also, one thing that I will tell you, the IRS have a process where I know most people want certainty to the extent that you want to get some kind of assurance from the IRS, and most people write a letter or they write a request to the IRS to explain what they're doing, and then the IRS gives them a letter ruling to say, hey, this transaction you're engaged in, we think this is how it needs to be treated. And then that person takes that ruling letter and then he goes on and do whatever he needs to do with it. One of the exceptions to this request letter rulings is that when you send a request for those kind of determination, the IRS will never rule on it, because in their guidance or instructions, they've stated that for a foreign person to be engaged in U.S. trade or business, it requires a whole bunch of facts and circumstances. It's highly based on facts and circumstances, or we say the totality of the circumstances. And so it's not something that you could just write an IRS letter for them to respond and give you a clear answer. Okay, so every issue needs to be reviewed independently to determine whether you engage in U.S. trade or business. All right. So we talked about the fact that there's been case laws. There's so many case laws. There's some of them that the court have been able to provide clear guidance that, look, based on the activities of this foreign person, they are engaged in U.S. trade or business. And then there are some that they actually stated that this person is not engaged in U.S. trade or business. Now, One of the most popular cases is Piedras Negras Broadcasting Company versus the commissioner. This was decided back in 1941. Now, in this case, there was a broadcasting station in Mexico that was transmitting out of Mexico, but a bunch of about 90% of its listeners came from the U.S. and a lot of advertising was also done in the U.S. But the advertising was done through an independent agent. So this foreign company, which is the Piedras Negras, comes into the U.S. They send agents into the U.S. to collect all the advertising revenue. They come into a hotel, they stay in for a bit. The independent agent, who is a U.S. person, meets them and gives them all the money. And then also, Piedras Negras also had a bank account in the U.S. Whenever they come, they stay in a hotel room. That's where all the transactions are done. They also had like a PO box, like a mailbox. So they had a bank account, they have a mailbox. 90% of their clients came from the US. And when they filed their taxes, they declared that, or they probably didn't even file the taxes, but they declared that they don't have U.S. trade or business. And the argument was that the services which kind of generated the income was done in Mexico, in Piedras Negras, which is a place in Mexico. And the court said all of the services that generated this income was performed outside of the U.S., which is in Mexico. And the fact that the income, most of the advertisers and all of that is from the U.S. does not mean that the income is taxable in the U.S. So for those involved in service operation, this is one of those cases that you could actually look at it and decide whether your business, your services income is considered U.S. trade or business. But the rule of thumb is income is sourced at where the services is performed, okay? So if you sit in your home country, let's say, for example, in India or China, and provide consulting services to U.S. customers, doesn't matter how much you make. If you make 1 million, 1 billion, as long as the services were not performed in the U.S., it does not matter where the income came from, okay? So you could exclude that income. Now, once again, when it comes to the state level, you need to be very careful because, for example, a state like California taxes you based on where the benefit occurred. So if you live in India and providing a service to a California client and the California client paid you, you could be subject to California taxes because the benefit occurred in California, not where the service is performed. So there's a huge variation between the state taxes and the federal taxes, okay? The federal taxes seems to be more favorable to foreigners, but the state taxes are something that you guys always need to review. We have 50 states, and it's insane for anyone to even analyze all the 50 states. So you need to review each case one after the other. So yeah, we're going to record a whole bunch of videos. Over the next series of videos, we would also talk about some cases. We will dive deep into some of these case laws that was decided, and then also see how it could be analyzed to fit your situation. Okay. Now, if you want to receive this slide that I shared, just like, subscribe, and share the YouTube video, and send me an email that, hey, I just liked your video. Can you send me that PowerPoint, and I'll send it to you. Okay. I'm looking forward to hearing from all of you, and stay tuned for the next episode of foreign and international taxes that we'll be discussing. Okay. Bye for now.